All right, everybody, welcome to another Watches. This is the Watches for the week of August 11th. My birthday week. My birthday is today. So if you're watching this on recording, you're watching my birthday lesson, so you know it's gonna be special right here because I got a lot to say and I just want to share more. So first, I'm gonna start with last week. What lessons can we take from last week's price action? So I'm gonna kind of go over the day from Thursday's price action. I feel like there was a lot to take on it. So this is coming off of Wednesday. Obviously, it's Thursday. So Wednesday, we had a crazy drop in the market, and it was almost convincing that we were gonna go ahead and run these lows, which sneak peek, I do feel like we're gonna come for these lows very soon, but we'll talk about that after we talk about last week. Now, it was convincing, but price comes into an hourly fair value gap, a bullish fair value gap, a BTSMC, all synonymous. All right, a bullish fair value gap, and then we start making our moves to the upside. Now, one thing I wanted to talk about with this is, let's go to the 5 right quick. I mean, I kind of just revealed it, but what did I say was the confirmation time frame for an hourly point of interest? I appreciate you, iPhone, and it's, if mentees could, yeah, thank you, mentees, y'all could just let iPhone know that it's gonna be well worth it, right? If y'all could just let iPhone know, it's gonna be well worth it. I guarantee that, almost a money back guarantee at this point. I guarantee that. So, real talk. So, thank you, mentees. I appreciate y'all. So we have an hourly point of interest, and the time frame we confirm that with is a 5-minute. Typically, that's what you want to use to pair it up with. So what I mean by that is, if you have an hourly place that price can potentially bounce from, chances are the 5-minute won't make fair value gaps out of that area in your desired direction. And so if you could kind of see here, we come into the hourly, I wouldn't just go long because we touched the purple area. I'm still not going long. I'm not going long. Boom, you get a fair value gap. Not only did we get a fair value gap, but we talk about it either not being traded back to, or price coming into it, and then not just coming into it, but making another one. That right there, y'all, is extremely bullish sentiment. So we made another one, and that other one was indeed respected as well. As you see, price ends up pushing to the upside, and the rest was history, right? We ended up making a big rally to the upside. Actually caught this rally during the nighttime. Screenshots in my mentorship chat. We were talking about this one. So this was a very nice play, because we were kind of at a point where the NASDAQ was absolutely going to go down if we did not use this BTSMC. Like, this BTSMC was extremely important. But if you're still kind of undecided, like, I don't know if we're gonna like rally to the new highs though, right? What if we just come up and make a lower high? It all depends, and this comes from understanding signatures, but it really all depends on this 4-hour city, which is a bearish fair value gap. And so what do I mean by this? You basically have price rally up to about the 50%, just about, not even, I don't think it got to the 50% of this price leg, but either way, we retrace pretty strongly, even though there's no fair value gaps, which is a telltale sign that it's not really a convincing price leg if there's no fair value gaps in it from this time frame, right? You see the 4-hour didn't make any 4-hour fair value gaps, at least none that's really getting respected for real. So yeah, so that's, first of all, that made this price leg very suspect. So then now all of a sudden a big push down comes, and we leave this blue 4-hour fair value gap, and we leave yet another 4-hour fair value gap up top. So that right there is important. Why? Because fair value gaps, what they'll show for you, it's not just a place to take bounces or rejections. Fair value gaps will also show you intention in the market. They're going to show you a level of, like I said, like intention, sentiment. And so when I see that the bullish price leg was lacking fair value gaps, but the bearish price leg is creating fair value gaps, to me, my eyes are open, like, okay, it might be ready to go and accomplish a bearish objective. Now, in this case, the bearish objective was to clean up this hourly inefficiency. On the daily, it was also balancing out an imbalanced wick, but I won't even go there right now. But, this was the downside objective. So now you're pretty much at a place where it's like, if we're bearish, we would reject this fair value gap. We have no reason to come to the higher one. So if we're bearish, I'm watching, and specifically the bottom 50% of this fair value gap specifically, in order to go lower. Now, why? Right? I'm not just telling y'all, so I'll tell you why I say that. The reason why I say that is After we run out this liquidity here, it's easier seen on the hourly. See this? This is what we would call trendline liquidity. After we run out this liquidity, it's very important if price has a bearish objective to remain heavy, to remain strong. There's no reason to basically run this area out, tap all the way back up here just to come back down here. So why is that the case? Like, why do I say that? I want you to think from the lens of like a market maker, to where market makers, after this sweep that occurred over these highs, I thought I was trying to draw here. Hold on. You see these highs right here? You see how we swept those highs, meaning we came above it, but we didn't go aggressively above it. We came right back down. That's a sweep. So we swept these highs. We ran the stop losses that existed above these red highs. And then we came down strongly, making 5,000 hourly bearish fair value, guys. That's a really nice run, which is why we like to trade for liquidity, because liquidity moves will always be the best moves in the market. And now we drop off strongly like that. You don't want to see, oh yeah, my fault. The market makers got in up here. My fault. That's what I was trying to say. The market makers, they got in up here. They got the best entries. When they swept these highs, right, they're taking out buy stops, right? So they're on the other side of that move. So they're selling off of that move. And here, they don't want you to get the same entry as them. Why would they want you to get this entry? So basically, if they have a real objective to run out these lows, if the objective is to run out these lows, they would not come here to come all the way back up here just to come back down here. That's a bad sign. So for me, my analysis, which I was sharing with my community, was that everything's about this 4-hour set beat. This was the very important area that we wanted to see price reject. It got an initial rejection, but it didn't hold, obviously, and price ended up pushing up. So at this point, I already know the next objective for price action is to run these highs. So in the morning, free community saw me put analysis in the morning that was telling them that I'm aiming for price to come up here, minimum to the hourly highest body. And that would be what, once again, I know people are new here, so I got to repeat certain things, but the highest body at a swing point will be a conservative target. Now, price can come above the wick if it wants to, like it eventually did. But if you want to be conservative, the highest body is always highest body of swing point is a very conservative target. You know what I mean? Oh, and I didn't even see our answers in the chat. Y'all was saying use a 5-minute time frame to confirm an hourly point of interest. Good job, people in the chat, for paying attention to details. So good. But yeah, so basically, whatever happened on this, let me erase this so you don't get confused. You see this blue area, the 4-hour SIBI? Whatever happened here is going to tell us everything we need to know for the next day in price action. This is important to know because these are some of the ways that I get my bias. I know that based on traditional market structure, which I'm not a fan of, based on traditional market structure, you can see that this would be having you moving bearishly because we got a closure under these lows. And so you may think, oh, after a lower low, you know, we on this hourly time frame, we make a lower high and then a lower low, right? That's the idea. But I use signatures. My signatures and price action have proven to be extremely accurate. That's how I've pretty much been building a name off of the accuracy that's been unmatched by many, and that's based on signatures in price action that I have grown to know. And so everything is going to depend on what happens here, because if it's not this, we're going here, and there's no in between. I don't care what nobody say. If we're not reacting right here, we are going to these highs. So any dips that occur in roots of these highs is not believable to me. So it could have rallied, came down a little bit. I know this drop is going to get bought up until we get here. So think about the power that gives you, because if you know exactly where price is going next, any retracement is what we look at as an opportunity. It's an opportunity. So keep that in mind going into the next day in price action. So we push above here. You guys understand now why we're looking towards these highs. We're getting that from like the higher time frame, giving us direction, you know, the 4-hour, like I said. And so let's move into the lower time frames coming into New York session. So this big green candle is an 8:30 candle. This is Thursday, so that's based on the initial jobless claims news. So I don't care anything about news when it comes to direction, but I care about news when it comes to the timing of the move that I already knew was going to happen. And so if I'm already kind of expecting upside, then that's most likely going to happen surrounding a news event. And so this big green candle is a news candle, and there's relevance to this candle. So I'm looking at this as an inefficiency now, being a fair value gap. Let me erase this blue area. This is now a fair value gap that I could potentially use to take price to the yellow line. So I'm watching this. In this scenario, my fault, something's wrong with my mouse. Hold up. All right. Yeah. So in this scenario, I'm specifically looking at the upper half of this fair value gap. Now, I always try to get the disclaimer so people don't trade incorrectly. I am not, and I've shown my mentees why I say this though. I am not always looking at the upper half of every bullish fair value gap. There are many bullish fair value gaps where I legitimately want price to go to the lower half of it before coming back to the upside. So it's situational, and in this situation, I am looking for the upper half. I just want to say that so people don't think fair value gap, oh, always go to upper half. No, but this is one of the ones where yes, we want to go upper half here. So that's for one. Now, I'm looking at that also. It's simultaneously a 5-minute fair value gap. So, you know, I could have like stretched this a little bit differently, and you'll see that it's also a 5-minute fair value gap. So either way, it's a very relevant area. And so, you know, I was looking at the 15, and could somebody in the chat tell me, I want to see who remembers this, what time frame do we confirm a 15-minute POI with, a 15-minute point of interest? What time frame do we confirm that with? Fire. Now you thinking of it the other way, Katrina, like you're right, we'll confirm a 4-hour with a 15-minute, but I'm asking what to confirm a 15-minute with. So it's what everybody's saying in the chat, it's the 1 minute. Good job. But 2 minutes not bad though, Opal. Like 2 minutes not bad. I wouldn't be mad at confirming with the 2, but 1 minute should be solid for a 15-minute POI. And by confirmation, once again, and shout out everybody in the chat who's been paying attention. Good job to y'all. And if you got it wrong, it's cool. Like ain't nothing wrong with a wrong answer. That just means that that's why we here. That's literally why we here. So we use the 1 minute, which means that if I'm inside of a 15-minute area, such as the purple, once price gets there, I'm watching the 1 minute for the 1 minute to react. Because I want you to realize that, for example, let's look at it. I want you to realize that on the way there, is the 1 minute bearish or bullish? They don't look bullish to me. On the way there, the 1 minute is making lower highs and lower lows. It's choppy and it's nasty, but then it gets to this area and all of a sudden, higher high, you got a higher high, higher low, higher high, higher low, higher high, higher low. We actually bullish for real. So that's what you would expect out of a valid point of interest, such as this 15-minute bullish fair value gap. All right, now we confirmed the 15-minute with the 1 minute. I'm gonna get back to that because that's the way I took it. But I actually looked at this after the fact and I was like, yo, I low-key could have taken this same play and gotten in even earlier than I got in if I would have seen or looked at the 5-minute time frame at this time. So let's look at it from a 5-minute perspective. So you got a 5-minute fair value gap. I know I didn't draw it exact because I drew it for the 15, but if I were to adjust it, the 5-minute would be right here, and I would drag this down a little bit right there, and boom, now we got a 5-minute fair value gap. But I'm gonna bring it back to the 15, but you catch my drift. So what time frame, y'all write in the chat, one more question. What time frame do we confirm the 5-minute with? A 5-minute POI, I wanna look at what time frame when it gets there. So I'm seeing a lot of 30s, I see a 15. I see a 15. Let me get a couple more answers. I see a 30. Let me get one more answer. I want to make sure. 15, okay. So I'm getting a mix between 15 and 30. The correct answer would be the 30. For a 5-minute POI, you look at the 30. For a 1-minute POI, that's where you would check the 15. But for a 5-minute POI, you looked at 30. All right. Yeah, thank you, Jay. Exactly. 1 minute will be the 15, correct. So now, boom, look at this. Let's look at this right quick. Let me do this and go here. And then let's see what the 30 did. Look how the 30-second is, I mean, pretty obviously bearish heading into this area. Boom, we touched the purple. Do you have a reason to go long? What, this one green candle or something? No reason to go long. This is how you save yourself from being in any drawdown. And this is how you save yourself from, for people who just enter in a POI the minute we touch it and have a stop loss all the way down here, this should help you out, because I'm pretty sure you're sick of having a drawdown this big, hoping that the play works out. And if it doesn't, you blow your account. I think there's better ways to trade with a better risk to reward. So I'm gonna show you one way you can look at it. It's like on the way to this POI, if I'm looking at a 5-minute area, I'm looking at 30 seconds and I'm waiting for us to touch it. Boom, we touch it. No bullish fair value gap comes out. No bullish fair value gap. Boom, we actually just made a bearish fair value gap. Oh my gosh, we still bearish. So guess what? No confirmation, no play. No confirmation, no play. Boom. Next thing you know, oh, we get a run on liquidity. Boom, we push up. You see this fair value gap right here? This is the first bullish fair value gap we got. Did price ever touch this for the rest of the day? Price never came back in for the rest of the day. So if you would have gotten in based on this fair value gap, you literally never even experienced drawdown at all. There was no drawdown for the rest of the day. Versus somebody who gets in here, they might have had to, like, they got in hoping it would bounce here, and then they had to like cut the play with a loss. Then it goes their way and they're like, I lost money for no reason. I should have held. No, you shouldn't have held. You shouldn't have. You just should have waited rather for confirmation. That's really the right answer. And so boom, we push up out of here. This fair value gap never gets revisited. We let us see that. And if it did get revisited, you would want price to act very sensitively to it, meaning like you want bodies to hold but 50% of that. And if price doesn't use this fair value gap, that's where I would cut the play. So like if I were to get in during the creation of this, which is low-key the entry strategy that I've made baby famous at this point, is like if I'm getting in here on the creation of it, my stop loss is going to be initially if price were to touch the high of this initial candle, because that means there is no fair value gap. But why don't I just show you so you can see what I mean? If I were to get in like right here or something, then the very next candle that opens up, if it were to trade down and come right here, I would just cut my play. So I'm risking just a few points for real, nothing crazy initially. But then if we actually create that fair value gap like we actually did, which is what I'm anticipating, then now I have this for protection. So now my stop loss is based on if we're going to use this 30-second fair value gap. All right. And so if we don't use it, then I know the play is not ready, but it's likely that we're going to use it. Why is it likely we're going to use it? Because I know the good POIs in the market. I know how to pick the most important areas in the market. So I understand that it's very likely that if price comes into the area I believe is going to go bullish from, and I see the 30-second react to a 5-minute POI with a fair value gap, like what? Most likely it's ready. It's ready to go back to the upside. Like most likely we're ready to launch off. All right, so this is how you could have confirmed that with like the 30. But let's kind of like see the time frame I used from my play. And actually, let me do this real quick. I want to bring it back to kind of where I was at. That's 2 o'clock, 3, 4. All right, so boom. Let's look at how I would have gotten, or how I did get in. This is not like would have. This is like what actually happened. 15-minute POI. So I actually had to confirm it with the 1 minute. But you seen how it happened on the 30-second? Peep this. Don't just look the exact same. This is just the 1 minute version of what we just took. The 1 minute makes the fair value gap that never got traded back to, and price never came there for the rest of the day. It is the exact same thing. So, that's why I'm trying to say these are good time frames to pair up with. So you see the 1 minute reacting to the 15, and price never came back there. And if it did, if it came back there pretty immediately, I would expect it to use it and run higher. If it would have done something like come all the, oh my God, why it's not drawing? If it would have came up here and then came all the way back down here, I would have liked that. That's bad. It shouldn't be back down here before it reaches a buy side objective, which would be this yellow line we were targeting. So if it's going to take off, it shouldn't come all the way back down here if it's going to take off. So that would be a bad sign. If it's going to take off above these highs like that, I would expect it to do exactly what it did. I didn't even see this before I made this point. If it was going to take off above those highs, it would have to react to this fair value gap right here in order to go higher. There should be no reason to come back all the way down there. That's a side note. So anywho, this is why I use this for confirmation. And for me, you guys can see this is the 15-second view, because for me, I'm basing it on the 1 minute fair value gap. What fair value? I mean, what time frame do I pair up with the 1 minute again? I pair up the 15-second with the 1 minute. We just talked about that, right? So That's why when I was looking at the play, I sent a screenshot to the community already when I was in it on Thursday. So that's why I was looking at it on 15, because I'm looking at it from a 1 minute perspective. So I'm confirming with the 15. But this is just the play that I was in. So I entered here on the creation. You see what is that? 18,128, right? So it was 18,128. And I was in it on micros, but for this specific play, I don't usually do micros. But I'm building a new Top Step funded. So I start with micros and I scale it to minis. But anywho, so this is my entry. That's what I'm trying to tell you. I enter right here on the creation. If I enter right here, I entered on the creation of this inefficiency. Stop loss would have been if we didn't make a fair value gap. Very simple. And then we out of there. And I never had to experience no drawdown. So, we hold it. And why am I holding it so long? Why was I holding this play so long? How did I catch hundreds of points on this play on NASDAQ? Because if I'm going to enter at a 15-minute, where are we right now? If I'm going to enter on a 15-minute fair value gap, the goal is to use a 15-minute fair value gap to take me to 15-minute highs. So the initial target would have to be the 15-minute highs. So off the rip, I'm already I'm already likely to get what I say, like 128 or something. So if I get it at like 128, I'm already likely to get like, what is this, 24 points before I could even like really call myself going break even. But do I expect the play to just stop right here? Like, that's not what I'm expecting, because this is why you need the background knowledge. Remember how we started off class? I started off telling y'all the 4-hour analysis. Where is the 4-hour telling me that we're going next? The 4-hour and the 1 hour both really gave me the target of this yellow line. So do you see why I could hold until the highs, or at least the consolidation, something? Like, you can hold past this initial baby target because you already had a direction from the higher time frame of where price is going. So that's why I'm not just gonna sell right here and take profits. Yeah, we was up on this play, and then same thing. If I know price is going to this yellow line and I'm holding my buys at this point, it's like price starts consolidating. I put this in the chat. Nothing is in hindsight. At the time, I said price is consolidating, but we already know where price is going, so we're not nervous. So I know it's like you could be kind of scared as price is choppy. It's like, is it gonna reverse? Is it gonna reverse? The higher time frame told you where price is going. So a little 15-minute chop don't shake nobody for real, because I know any retracement is gonna get bought up just like it did, and then we're gonna end up getting to the target. So that's for one. Now, what other gems can we take? What was it? 15-minute basic, we talked about that. This order block. Oh yeah, so look, let me write it. Let me draw this. You see these wicks? We fell just short of touching the wicks, which is very suspect to me, like, because there's a lot of liquidity up here. Now, there is liquidity at the highest body, don't get me wrong, that's institutional order flow, but there's even more liquidity at these wicks. So it's very suspect to me that we would fall just short. So when price retraces in that scenario, I'm like, yo, this is a suspect retracement, especially when the retracement is wicky and choppy, because we talk about price staggering into POIs. If price is staggering into a POI, it's likely to use the POI if you know what you're doing. So I know what I'm doing. I know this is a order block. Wink, wink. I know how to pick good order blocks. You guys should check out the masterclass. Believe me when I say that. So price comes into this OB. It's very likely we're going to use this OB if we're going to approach the yellow line. All right. And so, because this is engineering liquidity, right? So they're not engineering liquidity for no reason. So, and by the way, let me go to this 30-second right here. Where is that? Because I see another thing I highlighted I wanted to talk to y'all about. What was this about? Oh, same thing. I actually meant to write 30-second OB here. This is not, I mean, it's a busy, but like there's 30-second OB, that's why I highlighted. So notice how, let me back up for a second. Notice how at this time, we did not hit the yellow line yet. Do you see that order blocks occur on every time frame? That's a 30-second time frame, right? So that, this is choppy. This is probably like frustrating to play, But as long as you have a good order block, you know this is protecting you and you're going to end up making it to your destination. And so I remember being in this play kind of annoyed at the fact that price is like teasing the target, like, yo, what's up, like just hurry up and touch the target so I could like get up out the play. You know what I mean? Like, but at the same time, I'm looking at this like it's holding this 30-second order block. It obviously held it. You see body stayed way above 50%, body stayed above 25%, and eventually it makes it to the target. Now that it makes it to the target, we end up blasting through at first, but then we end up coming back down. Strong drop off too. This is nice. Actually, you know, you got another OB here that price ended up rejected and coming on down. But anyways, so it was also frustrating to see that price came this close to this yellow line. So it just did it again. It came very close to this yellow line and it didn't actually make to the target. So now it's getting close to the market close. It's like 3 something. It's almost 4 o'clock when the market closes. Very specifically, the market closed on this green candle. So I'm gonna put it to right there so y'all can see what happened. Now, a concept we talk about is time and price, meaning that just because you see a good setup on the chart doesn't mean that it's gonna play out if time is not in alignment. Time is not always just 10 a.m., 2 p.m., you know, silver bullet. It's not always about that. Time is also about economic events. So understand when I say time and price in the chat, I'm not just talking about AM, PM type vibes. I'm also talking about calendar events. But in this scenario, I am talking about AM, PM type vibes. So it's very unlikely that we're going to spend all this time engineering all this liquidity and not actually take that liquidity before the market closes. And so that's in the form of price pushing up at 350 sometimes, and other times that's in the form of price pushing up at 355, and other times it would be 358. I'm always watching those times because that's usually when price goes and runs for a target. So I'm looking at these clean highs, and then you also got this structural liquidity as well. So you got a ton of liquidity that just got built up. I look at liquidity like how I look at these Skittles. See these Skittles? It's like candy. They love to go and get their candy. Like, this is what they want. Oh my gosh. So they it's like somebody laid out candy, and this is like, or cookies or something. It's like Cookie Monster. Cookie Monster, he gonna go for his. I respect my boy Hustle. He gonna go for his. You gotta look at these market makers like Cookie Monster, liquidity is cookies. They baiting people to play stop losses at all of these pivot points. Stop losses, stop losses, stop losses, stop losses, stop losses, stop losses, stop losses. All these pivot points, and then they're gonna run for that joint in the last few minutes of the market. So if you notice that, and you notice that we have not hit a buy side objective, see? Remember the yellow line that we talked about since the morning? Yeah. We ain't actually touch it. So we gonna go and get that, believe me. When my son Denzel watched this, say, I'm leaving with something. We leaving with something, right? So boom, this retracement is an opportunity to get in. And I'm wondering, when price is retracing, what is it retracing for? If you know where price is going, but it's moving backwards, you have to ask yourself, what is it moving backwards for? So from a 2-minute perspective, I see that there's a 2-minute fair value gap. Technically, bodies held the initial one. We always look at bodies for fair value gaps, technically. But when I was looking at it, I had just highlighted this, and I'm like, my play is based on this. So if I see us react to this, I look at it using a 15-second personally. So I'm looking at it on the 15-second. If I see the 15-second doing what I want to see, I'm taking it back to the upside, right? And so that's why I was able to catch this move. I sold it around here though, but eventually it ended up running the yellow line. But still, this was like 131 points, I think, if I remember, 137 points, I think, in like literally like 2 or 3 minutes, 137 points. Like the Nasdaq just ran to the target right before the day closed, and then it ended here at 4 p.m. That's how they do this. You know what I mean? I see Kia said New York people love Cookie Monster. Yeah, they were engineering liquidity in front of the yellow line too, and waited for end of the day to get them cookies. Exactly. They know what they're doing. They know what they're doing. You see all of that. You see that? You got the liquidity here. You see they took everything in a few minutes. So if you understand that this market is time-based, it's a time-based algorithm, you can take advantage of those time periods. If you see a setup surrounding the popular times that they tend to run for liquidity targets, you can like really just wait on those setups and take advantage. So if I didn't trade all day and I seen this, I might literally take a chance at this little 2-minute fair value gap. My stop loss is based on just a few points for real. And you know, I got to target 100 plus points away. Come on, man. It's $20 per point on the minis. 100 points is 2K off the rip, off just one contract. See what I'm saying? So that's how it works. That's how it works. Nah, that's not a phase 2 thing, Kia. There's other things for phase 2 that would have given us confluence for this play, but what I was spoken on right now is all SMC, all SMC. But just if y'all don't even understand like how much I don't say on these free Zooms, I say a lot, and I hope that I'm giving y'all value daily every time in the free Zooms. But y'all don't understand how much I don't say. Y'all have no clue how much I don't say. There's so much more to know. But word, that's what I want to share with y'all regarding like last week's price action. And yeah, so shoot, I could finally erase this stuff because y'all don't understand. I really hate a busy chart. One thing I hate is a busy chart. So I'm gonna erase this and we're gonna talk about what to expect going forward. Yeah, like Katrina said, you need the mentorship to connect all the dots. Real talk. Real talk. Real talk. We don't need any of these, right? I don't need any of these right now on the NASDAQ. Those is gone. Oh my gosh, this is so freeing for me, like, and getting rid of all the clutter on the charts. So perfect. And this is where we sit. So with that being said, power 15 minutes facts. The mentorship, well, the next mentorship is not until December. So I'll let y'all know the price point later on. The previous mentorship was $15.97, and it's over 30 classes. There's homeworks, there's tests. I answer every single question, no exception. Everybody's question get answered all day. It's live classes. It's not pre-recorded. It's live classes, and it's tons of value. And I have entire presentations, PowerPoint slides. It's like legitimate. I treat it like a college course. I mean, I'm coming from a teaching background, so that's what I'm coming from. Like prior to being full-time trading, I was a math teacher. I was a high school math teacher. So I take that same mentality, that same approach. You know, I done got my master's in education, so I still have the skill set to educate people. So I just took it and now I educate people with trading. That's what I do. You know what I mean? So, and thank you, Kia. Yeah, we went at it in the chat like, yo, this is not an order block because boom. No, these order blocks we don't like these because of this. We like these because of that, et cetera, et cetera. We was going at it in the chat, but it's like it's healthy educated. Real talk. So yeah. What school? There's a school. I taught at a few schools, but like I won't. This one recorded on YouTube, so I'm not even gonna put the school's name out there. But it's in El Lado in Nassau. So yeah. So word. But all right. Next week. What is going on next week, man? Let's put last week in the past. Let's talk about next week. It's just a quick question, and we go talk about next week. So do I start with a clean chart at the beginning of each day? I keep the same POIs that I feel to be relevant on my chart as long as they're still in context. For a very quick example, like this 4-hour SIBI, I'm still eyeing this 4-hour SIBI. We haven't touched it yet, so it's still on my chart. This sell side liquidity hasn't been breached yet. I'm looking to see if price wants to breach that, so it's still on my chart. I'm also looking, really am looking, I'm kind of revealing what I'm about to see on NASDAQ, but I'm really also looking at this fair value gap, so I'm gonna be writing that instead. But this one, so those will be on my chart. Everything else is noise. I don't really care about it. And even like order blocks, for example, let's say there was an order block on this day over here, right? This order block is not relevant anymore. Order flow is now different. Coming up, we're not going to use this to go to low. Like this is irrelevant. This used to be relevant back when it was Thursday, August 1st. Man, 10 days later, this little 5-minute OB over here has no relevance. And anybody teaching you to use order blocks completely out of context and out of order flow like that doesn't know what they're talking about. And I want you to take caution. This is not valid and it will never be valid. Don't do that. That's the worst thing you can do. And that lost me a lot of money when I used to trade like that. You're going to learn to just stay within the order flow. So really, like I said, I keep things on my chart that are current within the current context of what price is looking to do. Price has an objective to the upside and downside at all times. So when you understand what price's objective is, it guides you on which POIs are relevant. All right. So that's just a quick side note. Now, yeah, like Q said, there is a lot of news coming into next week. So I'm excited for that because that means we may get some aggressive price movements. Plus, last week was a lot of consolidation. So looking at this upcoming week, Monday, not so much. Tuesday is PPI. PPI could cause the market to move a bit, especially as there's a lot of recessionary fear in the market right now. So we want to see how producers are doing. And then CPI is Wednesday. CPI is when we check for inflation on the consumer. And so this is usually a big time market mover. Inflation is a big deal right now as the Fed is looking to most likely cut rates in September. But they always stay data dependent. So anything that's going to influence their decision, such as CPI, has great relevance. So that's that. Thursday's initial jobless claims. This has been moving the market lately because right now, as we have a fear of recession, um, anything regarding employment is extremely important. Extremely important. Um, there's something called the Psalms rule, and without getting into detail on it, the Psalms rule basically got triggered. And the Psalms rule, since I believe 1965, has never been an incorrect rule that predicts a recession. So every single recession since I believe 1965 has been predicted by the Psalms rule. And based on the previous employment data we got this month, the Psalms rule got triggered. And so everybody is kind of like, oh, we're gonna head into a recession. There's a lot of risk in the air. And that's part of the reason why the market was selling off. It's also in conjunction with the carry trade, et cetera, et cetera. But that was a big deal. And so anything regarding people's job situation is which one? Sounds rule? SAHM, I believe. SAHM, if I'm not mistaken. And the carry trade is like CARRY. All right, so you can look into those things. Those things are really affecting the market right now heavily, and they're not done with. Like they're still in the air. So anything regarding recession, important. So you got retail sales. That's going to tell you how the consumer is doing with their spending habits. And yeah. So yeah, check those out. Check those out. And then Friday, consumer sentiment. We want to check that consumer sentiment. That makes sense, especially when it comes to recessionary risk. So I think there's some things that can definitely keep the market energetic this week. And once again, last week was consolidating. So usually after consolidation, something's usually gonna happen. And thank you, Kia. Appreciate that. Yeah, so bet. So we know what days we want to trade. Only thing I'll say is usually the 2 days before CPI. Like if CPI is Wednesday, Monday and Tuesday is usually not good price action. So I would be careful. I know we got PPI and all. I know we got that, but just be wary on Tuesday because it is the day before CPI. All right, but I do feel like Wednesday through Friday should be fire. Monday is the day that I'm least excited about. I think Monday is going to be chop, and so we'll see what's up. Now heading into the charts. Now heading into the actual price action. We know what days, so we got the time section. Let's talk about the price section. I always start with DXY. Now in previous watch lists, we have looked at DXY as something that is typically going to move inversely to the NASDAQ. But one thing that we have to do is adjust as traders and realize that it depends on the time period. In the time period where there is a US-based recessionary risk, the dollar may trade to the downside whenever the NASDAQ is also trading to the downside. So they wouldn't be moving inversely in this scenario, okay? And so that's why if you see these like big red candles that happened, this was when the NASDAQ was indeed dropping. The NASDAQ has been bearish in this time period, and so has DXY. So you're probably like, yo, Rel, they're not moving inversely no more. And it's like, yeah, because it's a US-based recession that's in the air. So the dollar is looking to trade down. If it was a global recessionary risk, then the US dollar be a safe haven because, they'll probably invest there rather than other currencies. But when it's just a US issue, like it's like what we're looking at right now, the dollar could trade down. And so it really depends on the situation. So right now, as I'm expecting potential downside on the NASDAQ, I'm also expecting potential downside on DXY. So I kind of want them to move in the same direction for this time period. Last week on the watch list, we talked about price rejecting this SIBI and continuing to move to the downside. and we're looking for, this was the first target we had last week. We hit that right away. And then this was the second target. We wanted to see price come into this weekly bullish fair value gap just as a destination. It doesn't mean I'm expecting bounces out of it. Just as a simple, easy destination, we fell just short of it. And then now we got a retracement. As you know, last week was pretty choppy. You could tell by the Tuesday, Wednesday, Thursday, and Friday candle. You could tell that it was pretty choppy in the markets last week, which it was. But ultimately, I would like to see price hold this daily bearish fair value gap in order to move lower. I don't really want to see it invalidate that. Also, if you want to look at it from a weekly perspective, you can see that there's a weekly bearish fair value gap right now as well, holding above price. So if we do push up, I also would like to see this weekly bearish fair value gap hold in order to send price to the downside. All right, so that's that. Now, and same thing, I'm still looking at the purple area, so I'm expecting downside there. The 2-year, once again, is, and I don't even need these 2 arrows anymore. I'm gonna explain why. The 2-year is also something we've been charting extremely accurately. There is no retracement and bounce point that we did not call out in these watch lists. Literally starting from really back here, but let's start from the bottom. We talked about the lowest body, boom. We talked about this daily BTSMC, boom. We talked about this daily BTSMC taking us higher. We talked about holding the halfway mark of this. We talked about this daily BTSMC taking us higher, and look where it took us, all the way to our target, which was the monthly SIBI. How did I know every single bounce point? Am I just some magician? Absolutely not. I ain't that special. I'm special, right? Just like you, we all special, but ain't special to where I just know something you can't know. It really has to do with just understanding the monthly time frame. And this is why I always start from the monthly, because it gives me direction on all the lower time frames. The monthly already gave me a sign that it's coming to this blue area, which is the previous monthly SIBI that we initially rejected. It already told me where it was going a long time ago, like from back over here. And so it framed every trade on every watch list that we've had for the past few months. It framed all those trades on the 2-year. And so you might look at this like, yo, what, we predicting the bond market? Yeah, because these candles do the same thing in every market. So if you trade Forex, crypto, options, futures, I don't care what you trade, commodities, they do the same thing everywhere. All right, so like I said here, if we make it past this SIBI, I'm looking for the 2-year to trade higher. I got this SIBI next, I got these wicks next. But it all depends if we make it past the blue. This is where you sit on your hands for a second and let price talk to you to see what comes next. So we came here, we rejected it. So as soon as we hit our target, you notice that we start retracing. Why is that? Why is that? The reason why as soon as we came there, we retraced is because price met an objective. All right, price met an objective, y'all. Whenever price meets an objective, you're liable to see retracements. So after objective was met, we retrace into this fair value gap right here. I do think that price is going to fall down a little bit more into this weekly BTSMC. See, this weekly BTSMC. I'm going to fall into it a little bit more, but I feel like we're going to end up pushing off of it and continuing higher. But if not, then I'm looking at these lows. All right, so everything depends on how we hold this weekly BTSMC right now on this ticker. The reason why I feel we're going to go higher is because of how we're dropping. So even if you don't trade the 2-year or care about the 2-year, which I also use for sentiment on NASDAQ, by the way, but if you don't care about it, take the lessons on the technicals to where after an objective is met, if we really had bearish intention, it will be very surprising to see price start off the move so lackadaisically. Like, why would you start off like this if you're not going to rock it? I'll be surprised to see this be the start of a really bearish move, right? Especially after being super bullish. If we're gonna go bearish, usually when they turn the page on people like that, they violate, like they destroy price. It's not like, it doesn't take, what is it, 6 candles, well, 5, it doesn't take 5 candles, potentially 6, just to make it past 2 candles, 1 candle really. So yeah, so all eyes on that. Now I'm gonna go to Forex first before we go to futures and options. All right, so let's go Forex. Euro JPY is something that I'm looking to see if price wants to potentially reject this weekly SIBI. I think I'm looking at price to reject, like especially the lower half of this. in order to end up trading back down to this yellow line. I feel like we're gonna go bearish on this ticker here, especially because after we fell just short of this objective, which is this liquidity, we fell just short. And by the way, you don't believe me when I say, what is the safest target you could always take for yourself? The safest target, the lowest body at the swing point. That's the safest target you could always take for yourself. Always, always, always. So boom, if you were in this play and you took that safe target, look, you got out before this retracement happened. But boom, we here, we could push up into this SIBI. I want to see price reject this SIBI and then take it down into this yellow line, because we fell just short of that. I don't think we're done with downside. So I'm looking at that. If it don't use this fair value gap, then I believe it's gonna push much higher. All right, so that's that. Euro USD. Also, last week we wanted to see if price could continue off of the reaction that we was getting on the weekly BTSMC we was looking at. It ended up running to our target. Yes, we love that. And after it hit our target last week, it just consolidated. So it's like, what next? Y'all know that I'm bearish on the dollar right now as it stands. And so that means I would still be bullish on euro. I'm still looking for more upside. And once again, same logic as I said with the 2-year. If we were really looking to reverse, I would be very surprised to see the reversal start like this. So if anything, it makes me feel that we may just come down into this BTSMC and then make its way back to the other side. All right, so I'm watching for that. But right now, even if you look at it, it's not the cleanest PA. And be careful trading dollar pairs before CPI, because dollar pairs before CPI can be very choppy and you might not get good movements. So I could see Monday and Tuesday still staying within this range. And then we're going to pick a direction after the 8:30 candle AM New York time on Wednesday. So time and price is very important for these Forex tickers if you're a Forex trader. Another dollar pair here. We've been sniping the heck out of British pound week after week as far as direction. And here we are with this weekly BTSMC is important to me. I want to see if bodies could hold this weekly BTSMC. Bodies, not wicks. Bodies need to. I want to see if bodies hold this weekly BTSMC to send us higher. I'm still looking for that here. If you look at how it's been dropping, also look at the two different directions. Bullish direction, really nice. Bearish direction, super choppy. So this is it's hard to believe in moves that look like this. It's always gonna be hard to believe moves that look like that, especially when it's staggering into a POI that has significance. So I'm watching this. If it doesn't react to this one, I would only get bearish if it closes under this one. I would only get bearish if it closes under this one. Other than that, I just think there's still a chance for it to rally, especially because I'm once again bearish on the dollar itself. I think there's just a few more right quick. This was last week's analysis for USD CAD. We talked about price holding this bullish OB for many weeks in a row. Price runs the target. And what did we say last week in the watches? I said, I could see, literally, bro, like you can't make this up. I said, I could see price running this and coming right back into the range. What happened last week? We ran that yellow line, came right back in. And why did I say that? What's the lesson we could take from there? It's the nature of the way that we ran that liquidity, because it's not likely all the time that we engineer so much liquidity for no reason. So the way up is weird, right? This is a very strange rally. There's a lot of liquidity to the downside and everything. It's just the way that we ran to this target is very sus to me. And so that's why I said I wouldn't be surprised if we just simply sweep these highs and come right back down. And so that's why that occurred like that. USD CHF, I think I'm looking for this weekly SIBI. And the reason I say I think is because I typically chart these up on Friday. So I chart all these on Friday and then I just get class hit. So weekly SIBI, I think I'm looking for the rejection here on this SIBI on the weekly to take us to this sell side target. So I will watch this bearish value gap on the weekly time frame. If you see the 4 hour coming in here and start making 4 hour bearish value gap, I would start aiming at first. I will look at there's probably gonna be a reaction inside of this wick, but eventually I think that reaction will get shorted and come back into the yellow line. So I'm looking for downside hit on that ticker. And last but not least on Forex is same thing. This fair value gap here on the weekly, looking for price to reject that and come to this yellow line. I don't think we're done with the downside objective here on USD JPY. All right. Now, briefly, one ticker is crypto for Bitcoin, and then we're gonna go straight to NASDAQ and S&P. So Bitcoin, I feel so bad for like Bitcoin traders because of, I mean, there's a lot of movement, but the direction has been really frustrating because since March, since March of this year, we have been consolidating. So you got a good like 5 months straight of just consolidation on weekly time frame, on a daily time frame, and it's been hard to determine direction, I could imagine. But I told you guys that for my crypto swing trade position, my initial exit was at 71K, and then I got back in down here, and I wrote it up here, and then eventually I got back out. Um, so because I feel that Bitcoin is potentially gonna push lower. I feel like it's gonna push lower. Um, it's you see this weekly bullish fair value gap. To me, everything depends on if price holds this. If price holds this, then I got Bitcoin coming to 95,760, and then next I have it going to 122,520. But it literally, like I said when I gave those targets, it all depends if we could take these all-time highs with a level of energy, right? We got to push out with a fair value gap. Then I would really believe in these next two targets. But without, if this fair value gap on a weekly fails, then I'm looking for Bitcoin to make a big move to the 30s. So it'll get pretty bad under there. And you know, at first last week it looked like it was really going to drop off. We talked about running these lows, yeah, and we pushed right back up. Did I believe in this move? If my bro is watching this right now, my son Tubbs, he's like, yo, what you think? After this day when Bitcoin ran, it was up like 14% in one day. He was like, yo, what you think? Like Bitcoin coming back up? I was like, I ain't gonna lie, gang, like I don't think so. I don't think so. I think this is a fake rally. Because of what the Nasdaq is doing, and I'm expecting them to move pretty much in conjunction, because if Bitcoin's up, usually Nasdaq is up, and vice versa. So being that I see more downside potential on the Nasdaq, I never believed in this rally, and then now you see they taking back this whole candle. So far, it took back half this candle. So I don't know, necessarily what's going to happen next as far as this consolidation goes. But I do lean towards the bearish side. If Bitcoin proves me wrong and it actually breaks out, I will be almost happy, right? I will be happy because I know some of my closest friends are really heavily invested in Bitcoin. But I'm just telling you that it's very suspect inside of this fair value gap, especially the way that it's acting with it. I wouldn't be surprised to see it fall out, and it could get pretty bad from there. But I don't think there's really in between. If it's not for this fair value gap, it's going to go down. Also, I think these lows are very important. I think if we lose these daily lows that we made last week, if we lose these daily lows, I just feel like look out below. I really feel that way. Because if it was going to bounce at any time, this was the time it would have to bounce. So if it come back here, not good. Side note, this fair value gap that is currently in right now on a daily, I don't even like the fact that it came back there. Like if we were truly going to reverse on Bitcoin, I don't even like the fact that it came back to this fair value gap in the first place. And the whole thing is suspect. So we will see what happens. We will see what happens. Now, that's Bitcoin. You said, wasn't the expectation of Bitcoin to consolidate after the halving? See, the thing is, when it comes to expectations, when everybody's looking for one thing, I just look for the opposite. So a lot of people after Bitcoin, they expected it to consolidate and then rally. So everybody's in position for that, especially with the institutional involvement now. And so I just try to say, all right, what are people not looking for? Okay, that's probably what's going to happen. People are not looking for Bitcoin to come up to 73K and drop back to 30 something. So I wouldn't be surprised to see that. Plus, other reasons why I look at Bitcoin suspect is, you see how Bitcoin ran all-time highs? Cool. Ran all-time highs, beautiful. Didn't push out. That's suspect. Now, Ethereum never ran all-time highs. Never ran all-time highs. Suspect, right? So that's a divergence when they should both be moving at the same time. But then when you look across crypto tickers, look at every other crypto ticker. You see Polygon, dang near all-time lows. Dogecoin, Dirt, Shiba, Dirt. Everybody is down, bro. Let's go to the credible ones like Solana, credible. Didn't run all-time highs either. Rejected the target we had, by the way. See that to the tick. That was smooth. and rejected that RB target. But anyways, you know, never pushed out. Bitcoin is the only one that ran all-time highs, and that's suspect. That's suspect, especially the way that it's moving. So, like I said, it's all about that fair value gap on a weekly. If it don't work, exactly right. You see what I'm saying, bro? It's not. It's weird, bro. It's weird. So we'll see. We'll see. Now, let's go Nasdaq, man. Let's go Nasdaq and ES. What do we see here? So, I mean, I kind of already like hinted at it. I do expect more downside, but certain things have to happen. So this is what I want y'all to take from last week, bro. Like, my mother, right? She called me. We was on the phone. She's like, "Oh, like, didn't the stock market crash?" My group chat, they don't know nothing about stocks. My group chat is like, "Yo, bro, what we doing, gang? Like, the stock market crashing." When that's happening, bro, I'm like, I probably should go long, cause real talk, when everybody's eyes is on something and everybody's expecting one thing, you gotta look the other way. That's why we say buy low, sell high. All right, it's a concept. So if everybody got bearish because it was global news that every market was crashing, please look the other direction. It's too easy. So now also look at the weekly real quick. Remember, this was not a green candle at the time, so you need to visualize this in real life. This was a red candle at first, coming down with mad momentum. Mad momentum. Guys, that bothered me. I had to do it properly. I'm sorry. Let me do this error correctly. This is coming down with a whole lot of momentum. Now, people, who in their right mind would not expect price to run these lows? After coming down this low, it looks so probable that we're gonna run these lows. Like, that would be a quote unquote change of character. I hate that market structure lingo, but that would be a quote unquote change of character. That's a real market structure shift, et cetera, et cetera. Everybody in a mama trade traditional market structure. So everybody is looking for this to get ran. Ain't that the perfect time? The picture perfect time. If I was a market maker, I would do this too. If I was a market maker, I would do this too. Look at the evil ways that they move. I would do this too. You feel what I'm saying? Like, come on. Come on. So seeing the rally that occurred last week and then the consolidation to chop up both the bulls and the bears trying to get in on the big worldly news, that's expected. Because the whole world is looking one way. We going down. We going down. This pop right here. This pop right here. And then the drop. What you thought they did? Oh, lower high, lower low. All the market structure traders is getting short there. Where were we though? What was our position last week during this day when this happened? Our position last week, we talked about taking this pop to the upside. We went long here. We know what's up. We know what's up. And so, and I ain't gonna lie, every price leg this week we took advantage of. All of them. Every one of these price legs we took advantage of. All the way down here, we took this whole drop to this whole pop, all of it. You know what I'm saying? And then Friday, we was like up. We said Friday's gonna chop. It's all in the Discord. Friday gonna chop. What happened on Friday? Straight up chop. So, you know, I'm make sure y'all check y'all mics. Make sure y'all not coming off mute. So yeah, I say that to say never take the obvious move. But with that being said, they just engineer more liquidity here. But I wouldn't be surprised to see price pushed up higher and either to this area, which I'm gonna talk to you about, or a little higher up to here before dropping it really hard to the yellow line. So what areas am I looking at? I'm looking at the 4-hour bearish value up right here. This one I think is less likely than the one above it, but I still have to watch it for a specific reason. There's relevance to this one in a certain way. So once again, what time frame do we confirm the 4-hour POI with? We confirm it with the 15 minutes. So if price comes into here and then the 15-minute starts making bearish trade value gaps, especially invalidating bullish trade value gaps, I'm gonna start getting convinced that we're ready to make our move to the downside. All right. And I think that these fair value gaps right here are gonna be irrelevant. I think we're gonna trade past those. But like I said, that's if it delivers like that. All right, that's only if it delivers like that. But which one do I really predict? Like, if I had to just guess right now, I do feel like we're gonna push a little higher and come into this fair value. I think this is the one we're gonna reject. I think we're gonna reject the lower side of it though. This is what I'm really eyeing, the lower side of this 4-hour fair value gap. That's the one that I'm really interested in the most. Like if price go there and I see like the reactions I'm looking for, I might full port. Y'all. It's over. Risk the whole house on it. I'm playing. Never do that. Please never do that. But I think this is my ideal target, bro. This fair value gap right here. If we could come into it just a little bit and then reject off, man, I think it could be a very massive sell to the downside. And it might even be in the form of a CPI candle. Like you know how CPI candles be like flash candles, it'd be like boom, like that. I wouldn't be surprised to see something like that happen on CPI. I would not be surprised at all. Just a little bit. So yeah, 2 areas of interest is this and just below it right there. I might even do the reason I'm keeping this daily SIBI on here is because I would get bullish only if we invalidate this daily SIBI. That's the only how I get bullish on the market. Anything below this daily SIBI, I'm bearish on. So I don't care if we come here to reject, come to these wicks and reject these wicks, and it looks like a double top type vibe, whatever it is. But I'm only bearish as long as we stay below that SIBI. Once we invalidate this SIBI, to me, prices coming to all-time highs next, and it's gonna expand. So everything for me depends on how we trade in this general area. So I'm watching these time frames closely. Somebody in the chat said they can't hear. Oh, you say you can't unhear it. I'm weak. Yeah, the when I say little bit, I'm weak. Yeah. Shout out my Jamaicans. But word. So like that's that. And I grew up in New York and all that. But that's my whole mother's side and my family there Jamaican. So much love. So here we go. So this is ES. Same vibe, like really the same analysis for real. You could watch this bearish fair value gap. I know it's kind of hard to see. I didn't highlight it on my chart, but there's a weekly bearish fair value gap right above price. If the bodies of the weekly candle hold this, that would be ideal to take us to lows. I do feel we're going to trade up a little bit higher before going lower. What is this on a 4-hour? Yeah, like same vibe, same analysis. This very same fair value gap on the 4-hour. I wouldn't be surprised to see any of that before I move lower at all. So I'm just looking. I said this last week too. I'm looking for just a little more upside before we trade back to the downside. So and then think of it like this. Always look at the market from both perspectives. I just talked to you about how a bear could look at it. How would a bullish person look at what's transpiring right now? Like if I was bullish, I would hate how the market is popping out of my quote unquote support level or whatever you want to call it, demand zone. I don't know what I trade. I don't trade supply and demand, and I don't trade support and resistance. But you know, if I did and I was looking for a bounce there, I would be very frustrated with how price is moving. I'd be like, yo, what is this? Like, what kind of rally out of a freaking worldly news low is this? Like, we came all the way back down here into this wick, then pushed out, and then we chopped. Like, the whole thing to me would just be very frustrating and annoying. And I'd be like, this is so sus. I feel like I'm on the wrong side of the market. If I was bullish, I would hate to see this. So to me, it makes me feel like, yeah, because we're really bearish. But we'll see. That I don't fall in love with either side. I need to see what I need to see. I need to see. So I'm watching those areas we talked about, and if they don't deliver, they don't deliver. Then I get bullish, and I'm gonna make money on the upside. Now, YM. Oh, my fault. An example of that. Let me show you what I mean. How you could adjust on the fly. Once again, what happened last week on NQ? Oh yeah, it was this drop. Let's go to the alley. We talked about this at the beginning of the Zoom, but this became convincing because we had filled in the gap that we had made at the beginning of the week before the big drop off. I want to get it for y'all real quick. You see, there was right here. This. You got that gap there on a 4-hour. Boom. We rejected this gap really nicely. Came all the way down. Let's look at the hourly version of it. Big drop. It's so extremely convincing. All right, it's so extremely convincing, and like we moved to the downside pretty aggressively. Now what do we say? If we're actually bearish, it all depended on this fair value gap. After this, I know we're bullish. So once we push through it, I already know what's up. And so do I just hold on to a bearish analysis and say, no, we gotta be back? I know we come to the yellow line. No, bro. If it's not leaving the signatures for bearish price action, then guess what? We not bearish. All right, we not bearish. All right, so that's how you like switch. You need to switch biases right away and get on the correct side of the market and make money to the other side. And that's why we were able to do that. And like Rose said, you want to definitely stay and pay attention to the order flow. What is the order flow telling you? So that's that. Now let's go to YM, which is the Dow Jones. Expectations out of the Dow. From a monthly perspective, I like the Dow making a move lower. When I look at the monthly, you know, not to jinx it, but when I look at the monthly, it's like very clear to me that we're gonna come into this monthly fair value gap minimum. I'm connecting this because it's a VI right here. So it'll come into this blue area minimum. So the fact that we haven't delivered there, to me, any retracement is an opportunity to take it back to the downside. Now, what was the target last week? We took the target last week. The safe target was the lowest body on the weekly time frame. What was the lower last week? What was the lower last week? That exact target we gave on the watch list, and then price pushed out, but it pushed out really nasty. So like I said, I don't believe in it. I'm looking at this area as an area that could take us back down to minimum this blue area. So the lows they made last week, to me, we about to kill that. Look at all this liquidity that we got engineered right here. I feel like we're going to destroy that whole section. And so what do I think we'll reject? I'm looking at this daily CB VI, and we can reject that. There's a bearish fair value gap on the weekly. You could look at that area, but this overall area, I'm watching the hourly time frame to see what price we're gonna do. You know, this is technically a bearish OB, but I don't really want to see price come up in here. I really don't. If it did come up in here, it needs to reject the lowest part of it. When I say the lowest part, I really mean not even the halfway mark. I'm talking about the low part. If it starts pushing up higher, I think we're bullish. All right, so if price even went this high, it needs to reject the lower side of it. But where do I think we're actually going? I'm looking for the daily bodies. I'm looking for the daily bodies to hold this blue area, the daily bodies. All right, that'll be a volume imbalance. So the Russell. Now, when Russell was over here, the target on the watch list that we gave was for price to come to this yellow line. So we called this whole rally for price to come here. What happened after price met an objective? After price met its objective, it just consolidated. Okay, what comes after that? An objective was met. You need to see if price wants to reverse because an objective was met. How do you know if it's going to reverse or if it's going to retrace? Well, if it's going to reverse, well, my fault. You have to go to the higher time frame to get that direction. All right, or you could pay attention to signatures and price action. And there's a ton of signatures that I teach about price action. But I would say this to you: it's very suspect for price to make a fair value gap up here and not trade back to it after meeting an objective. Very suspect. If I was bullish, okay. So seeing that happen and then seeing this, you see why we got bearish on a Russell after an objective was hit. Now, also, last week we talked about this liquidity. I said specifically, when we go to take this liquidity, it's going to take it very quickly. It's going to be a quick move. This happened right away because last week was super bearish at first. It happened right away, but this is exactly what I'm talking about when I say if it's going to take that liquidity, it's going to happen in a quick move. As soon as we hit the objective, see, as soon as we hit this objective by taking this liquidity, what happened? Price retraced. And it's been choppy and stuff. Now what's next? I don't think it's done dropping. And I'm looking for the same thing. I'm watching this area. I would prefer for price to reject the lower half of this. If it's going to continue down. And then I'm looking for price to come into this wick area next. All right, so but either way, I'm thinking we're going to make a lower high, then a lower low. So that's that. Now the Nikkei. A lot of the news from last week that caused a big drop off was based on the carry trade, which is directly influenced with this Nikkei thing. So this ticker, I've been watching it. I've been watching this ticker. Oh my gosh, I've been watching this ticker before the carry trade came out. I didn't share it on the watch list, so I can't claim it because y'all gonna think I'm capping, but I didn't show y'all too many times that I be know where price is going before news comes out. So I just hope that y'all actually believe me. This has been on my watch list for a while. If you just check old videos, you'll see that it's been on my watch list. So I do chart everything you see, all 200 and something, all 200 something tickets on here. I chart these, all of them, every weekend. So obviously I have been charting this one. And what made me suspect about this ticker was after we got this run on liquidity here, we had these fair value guys come out. So already I'm like, this thing's about to drop off. Why did I not share it on the watch list? Because I feel like nobody trades the Nikkei. So I'm just like, nobody wants to hear about that. But it's just still interesting to see that it took like news to cause the drop, but like you could have seen this drop coming based on what was happening here. Or like literally, you know, we're about to drop off immediately on this first red candle. You know, all this is going to happen. So like, yeah, they're going to blame like the carry trade and all this, that, and the third. But like, bro, it was very clear what was going to happen before it actually happened. Like literally since up here, we already knew what was coming next, just based on signatures. And so I just always say, man, like everything is in the charts first. It's just so coincidental that all of a sudden we really get the aggressive part of the drop, like during the carry trade news. Like, all right, bro, we've been seeing this coming. But anywho, I don't think it's done dropping. I don't think this is the bottom. I do think that we're gonna most likely use this weekly SIBI to go down. But this weekly SIBI is very important. I do really kind of need weekly bodies to respect this. Weekly bodies need to respect this area if we're gonna make our way back down to the yellow line. So I'll be watching this one heavily. We're actually able to trade it. I only tried to trade it on on TopStep, and I was able to. So yeah, I don't even want to show y'all the screenshot of the Nikkei trade that I was in. Let me see if I can find it real quick. Real quick. Where that's at? I'll pause my screen because this is pain. Yeah, this is painful for me. So show y'all this real quick. So I was in NASDAQ and Nikkei at the same time. So this is my first time ever trading Nikkei. Nikkei is on the left side of the screen right now. You can see Nikkei is on the left side of the screen. NASDAQ's on the right. So I'm in this trade. This is that nighttime, bro. I'm up 2K there. I'm up 1,200 there. And I was so convinced that we were going to hit my target that, yeah, with one contract, facts, it was dropping off. It was dropping off. I seen it coming. I was so convinced we were going to hit my target that I was like, man, honestly, bro, I'm about to go shower. Like I got my stop set. I got this stop ain't even a good stop either. Like I really technically should went break even, but I ain't gonna front. That's why the market humbles people, because I had to get humbled, because in real life, I was like, man, I know where we going. I don't need to stop. Like I'm Gucci. I know where we're going, bro. And this is my funded account too. It's like an idiot. So I'm like, yo, whatever. And I go to shower. By the time I come on my shower, that trade was gone, bro. It was gone. Took back everything. I was like, oh, what the heck? Crazy reversal. We came super close to my target, and then it was out of there. I was like, all right, bro, y'all got it. But the Nikkei pays though. It do pay. Yeah, dude. This is actually after class, Kia. This is after class, right after it was late night, bro. I take the shit on my own. And then the shower, that was a very expensive shower. Over a 3K shower, put it like that. I was like, wow, that really hurt my soul. But anywho, yeah, one contract could pay you, no cap. So should have stayed funky. Real talk. But we looking at this weekly fair value gap to take it to the downside of the DK. Anything? I don't feel like I wanted to talk about the copper thing. Nothing really there. We almost done. I do think copper is coming to lows though. I am bearish on copper. I can say that from a monthly perspective, but whatever. One thing I'm going to tell you about CL is I would stay away from CL right now. I'll be real with y'all, because this is how you avoid chop. Look at the monthly real quick. First and foremost, the monthly is not bouncing off anything. And also, the monthly is not rejecting anything right here. So what is going on? We're in consolidation. There's nothing happening on this ticker from a monthly perspective. So when I do my top down, if I can't get clear direction from monthly or a weekly, I don't really want to trade that ticker, because the highest time frames frame the best trades. Because for example, if the monthly was bearish, when I peep that the hourly is going bearish, I know it's going to move aggressively because it's in the direction of the monthly. So when I can't get true direction from the monthly, it doesn't let me know what the trending direction is on the lower time frames. Now, of course, I could scalp in there. Of course, I could still find day trades and stuff. I'm basically saying that if you have a decision to trade a ticker like the NASDAQ, which has more clarity to me right now, or insert any ticker where you could get direction, why stress yourself with tickers where there's not as clear direction? I just don't. It's like literally why. Like you gotta really ask yourself, like, why am I forcing a trade on CL if I could go to a different ticker and find something that makes more sense? And that's what I mean. So when I look at the oil trade here, it's choppy on both sides, and it's just like, what is really going on? Not really a fan of it. And so I just like literally my message to CL traders. I don't really think I like what's going on here. Like you could look at both bullish and bearish fair value gaps in this overall section, and a lot of them are both getting invalidated. And so it's just that means we're most likely consolidating. So I would stay away. I think my sentiment is largely the same on gold. You can see gold's daily chart and know what I mean. This is literally chop. We're chopping on a daily. Gold's best trades will exist above here and below here. All right. So yeah, this is disgusting. This is just nasty work. Look at the weekly. Like what kind of why even force this? Why even force this on a weekly? And why even force this? Well, the monthly is like wicky and nasty too, but you know, if I had to truly pick a direction on gold, I wouldn't be surprised. Yeah, I wouldn't be surprised to see gold go to the downside eventually at all. Like at all. I could see gold making a big drop, but trying to time that drop is actually gonna probably blow your account because you don't know how long it's gonna consolidate. We just seen Bitcoin's been consolidating for 5 months. So what if gold is trying to consolidate for 10 months? Like just stay away. I think the last two I'm gonna do today is just SPY and QQQ. Not really much to say there besides like I'm looking for if SPY can reject this daily bearish fair value gap and VI overlap. So if you see what I'm connecting here, I'm connecting the bottom of this green candle, right? The bottom of this green candle and the top body of this red candle. That's how I'm connected that. If price can reject that and it traded the downside, that would be lavish. Anywhere in this area, I'll be watching the hourly time frame. But overall, I'm bearish on SPY, as y'all know, because I'm bearish on ES, and they're both the same thing. It's the S&P 500. QQQ, same thing. Same area I'm looking for rejections on, right there. On the QQQ chart, I'm bullish with a daily closure over 475.56, which is the Thursday candle. If we get a daily closure over Thursday's candle from August 1st, then at that point, I'll be looking for QQQ to take all-time highs next. So as long as QQQ exists under this yellow line, I'm bearish on it. And ideally rejecting anywhere in this blue area. Anywhere in this blue, I'm cool with the rejection. Anywhere in that blue area to trade down. So, but we'll see what comes next. You know, that's largely what I wanted to say. And you know, actually, I'll say this for the YouTube recording as well. You know, I'm doing an order blocks masterclass. Masterclass is an understatement. Masterclass is an understatement. I'm doing an order blocks masterclass on August 24th, 2024. So if you're watching this video before August 24th, 2024, I'm gonna leave a link in the description of this YouTube video so you can tap into that class. Because you're watching it on YouTube, I'll give you the link. The link for the 19% discount code is oh my gosh. Hold on. What is the link again? I put it in the chat. What's the discount code? BDay19. That's what it is. BDay19. That's my birthday discount code. Is BDay19. So yeah, if you're interested, thank you, Mary, for that. If you're interested, type link in the description. But there's a free community link in the description as well. So make sure you touch that. People in the Zoom link right now, I'm gonna say after for little questions, but on YouTube, we're gonna wrap this video up. So that's all she wrote.